Welcome back to the Business Career College video series. Hopefully you've watched the earlier video, Taxation of Life Insurance. If not, this video might leave you a little bit lost. So we're going to look now at the partial surrender of a life insurance policy. So in a complete surrender, you are walking away from the contract. You say, I don't want that life insurance anymore. But in a partial surrender, you're only reducing all the components of this life insurance policy. So we have a $500,000 policy. Let's say we decide now, for whatever reason, that we need only $200,000 of that. So we're going to use all these other characteristics still, the same cash surrender value and the same ACB. So we've never surrendered this policy. We're starting from scratch. We need only $200,000 of life insurance. Basically, that's going to be 60% less. That's 60% less than what we had. That is, you can take $500,000 less 60% is going to give you 200,000. Or if you want to actually see that math, you would take 500,000 minus the 200,000 that you're going to be left with, divided by the 500,000 you previously had. That's 300,000 divided by 500,000. That's a 60% reduction. And what's going to happen now is we're going to apply that 60% reduction to every component here. So it won't work out perfectly, but roughly your premiums will drop by 60%. Your cash value will drop by 60%. So that CSV will come down by 60%. That means you'll have 60,000 less 60%. You'll have $24,000 remaining, which you can infer then, if I had 60,000 and I have $24,000 left, that means I'm taking out 36,000 of that. Okay, so I'm getting 36,000 out. And your ACB will also drop by 60%. So everything is going to drop by 60%. Most importantly, as we've seen up above, your death benefit is going to drop by 60%. Now, practically, not all life insurance companies necessarily allow this arrangement. That's fine. We're going to assume that it's allowed for our purposes here. Now, this actually becomes, the next step is not too difficult. Once you accept that everything is dropping by 60%, we can do the math, and this is exactly what you'll do. You'll do the math for the complete surrender. So you would just do exactly that same math, no change. Oops. You would run through all that same math. And then you will apply the 60%. So we said everything's going to be reduced by 60%. Okay, or everything is going to come down by 60%. That means I'm getting 60% of my cash surrender value. Instead of getting the 60,000 I got in a complete surrender, I'm getting 36,000. I'm using 60% of the ACB, so instead of using 25,000, I'm going to use 15,000, and then I'm going to have 60% of the same gain. Instead of 35,000, that becomes then 21,000. And you could do the math either way. You could multiply this by 60%, or you could run the subtraction here, 36,000 minus 15,000. It's the same result either way. We're still going to use the same 40% tax rate. That may not be representative of reality. You may have a lower tax bracket now, but you can't assume that. We use a 40% tax bracket. Always with an exam question, use the tax rates that you're given, which means, once again, 60%, that's an $8,400 tax bill in this case, as opposed to the $14,000 tax burden we previously had. That would have been my complete surrender, as we saw up above here in green, or the 8,400 would be the result of the partial surrender. So when you have the math to do for partial surrender, it can be a little bit daunting. All you have to do is step back, do the math for the complete surrender, and now you just apply whatever the percentages are, and you only have to do it once. We could have done the whole calculation here and just done the last 60%, and we would know an $8,400 tax consequence or $8,400 tax bill associated with that partial surrender. I hope that helps. It's a fairly complicated set of ideas, but just slow down one step at a time, do your complete surrender math, apply your percentage, and you're in good shape. Thanks very much. I hope that helps, and I hope that you do understand this fairly complex tax concept with respect to taxation of life insurance. Have a great day. Enjoy